I send the link to the trading room. Hold on one sec. All right, so let me get that. I'll grab Spotlight. Okay, cool. All right, I'll talk. I'll introduce and talk. You're still out. You're still out west, right, in Oregon?
Yeah, I'm in Washington. Yeah, I'm on the west side.
Okay.
West side.
The west side.
Yeah, it's like 1:30.
Oh wow.
Yeah, I still get my afternoons, right?
Yeah. All right. So we are live. Let me just grab this. All right, we're live. I'll wait a few minutes to see who wants to get online with LA out on the West Coast. LA, how you doing?
Hi, good afternoon. It's nice to be here.
So,
Tracy, thank you for having me, and it's an honor and a privilege. You don't do this very often, and I just want to say thank you.
You're welcome. We should do it more often. I like to talk to people who do things maybe differently, or maybe they have a strategy or some method of trading that's different than what I do. I know that you use ABCD patterns quite a bit. Why don't you talk about that?
Oh, wow. Yeah, ABCD patterns. Gosh, I got back into that like back in 2012 or something, I've been trading for quite a while. I've been trading since late 80s, early 90s. Well, I was actually investing, And I tracked the closing print back then on a piece of graph paper with, pencil. But, that's why I like this room so much, is it complements my trading style. And the ABCD pattern is something that you developed that was called the trade of the day setup.
That's correct.
So it basically has criterias that need to be met or fulfilled in order for it to be successful. More successful than other days, I guess I could say that. A is normally the IV pivot of ATR of a stock.
All right.
ATR is the total travel distance of price action for the day. Daily average price action.
Yeah, so what we can expect on a daily average true range.
Correct. So IV normally falls within parameters of 70 to 80% of that ATR.
Mm-hmm.
That's a pivot. So then B is about 50% of that, or VWAP. You always talk about, hey, look for a bounce off of VWAP to get back in. Don't buy the highs of the day, buy the dip. Right. So that's primarily what I look for on B, is a 50% retrace of A, or a bounce off of VWAP with volume coming in, and price kicking back up with volume. Volume has to be there, like water pressure. It has to have some kind of momentum, some kind of fuel.
Like
it can't
today.
just be a trickle. It's got to be aggressive. It's got to be progressive too, kind of.
Right.
So yeah, that's why I look at and then that's where I get my levels from. Like I take the whole leg of A, and that's half of that's D breakout. So like, let's say Tesla's 400.
Let's say that 1 second. Say that again. So you're looking for the A pivot. Okay, so that's your average true range, and then you look for like a 50% retracement. That would be your B, usually.
Yeah, that's normally VWAP or B, whatever comes first, whatever support comes first.
Mm-hmm.
Right. I'm not looking for exact either. I don't look for exact. I'm just looking for an idea where it might happen.
Yeah, me neither.
I'm not counting penny in front of a freight train. So so B, yeah, A is IV, is the IV leg of the stock. Mm-hmm. ATR is the full leg, which is D.
Mm-hmm.
Right. So B is 50%, and then C, when it bounces, is about 61%, 61.8%. And then C is about 50% of B. Right. It can't be lower than B, because then it negligates it just if the patterns doesn't qualify. right? So then C goes up and forms D at the intraday highs, and then the intraday high breakout is half of A. So let's say Tesla's 400 and 420 is the intraday range from low to high, which is A. Half of that would be 10 points. So you're looking for a D pivot into 430. That's where I get my levels from.
Okay.
That's where I'm just getting those levels from. It's just doing the math.
So what did you trade today? You want to throw something in the trading room?
I traded Tesla off 420. I traded Amazon a little bit into a pivot.
You trade Tesla a lot.
Yeah, the reason why I trade Tesla a lot, I'm glad you brought that up, is because it has a higher IV rating. So another thing that you brought up that I've learned over the years is you use the Sodoma. And if the Sodoma is tilting up and to the right, then the stock is in play, right?
Slope of the EMAs.
Yeah, the slope of the exponential moving averages.
Yeah, SOTMA, right? Yeah.
So with a 24%, I need to have IV over 24% in order to day trade it. That's a criteria I use. I use a lot of criteria when I'm trading. Like, is price above VWAP? Is price above previous day's close? Is price sloping away from VWAP? Is the Sodoma's turning up? Is, what's it doing on the daily? And it's a top-down market approach too. Daily, 60, 15, 5. Right? So if it's working on the daily, it's going to work on the 5. So I'm looking at, the IV of Tesla is 56%. The slope is going to be greater than it's going to be on like a price action. The slope of price action is going to move faster. It's going to be greater than it's going to be on like something like Apple at 24%.
Right. Okay.
Right? So it's a slow mover. It's a slow mover. It's an investment stock. It's not a trade, like something you want to trade. I think Apple's at 22%. So that's another reason I look at IV every night, is because I set it for what I can and can't trade. So like right now, Nvidia's at 39.5%. AMD's at 37%. So those meet the criteria of being above 24%. I've found that stocks above 24% IV you can trade them a lot easier. You can day trade them a lot easier and scalp them.
Right.
And with Tesla has a fat ATR. It has like a 20-point ATR. I think it's at 23.75 right now or something. So you can pick off 5-point pockets off of support levels like 420 to 424, 420 to 424 all day, those are, and I look for that because I'm looking for 3-to-1 or better trades. 4-to-1, 5-to-1. I mean, come on. If I mess up twice, like let's say I'm trading a 50-cent delta, and I have a 1-point stop, and I have a 3-point target, and I mess up twice, and then my third trade's good, I still green on the day.
That's correct. Yeah, that makes sense. It's all math.
It's all math, and I've been working on this for quite a while. I think Crimson explained this to me because I used to just wing it, and she told me, no, that's not going to work. And if I'm trading 4-to-1 or 5-to-1 trades all day, I mean, I'm looking for 3-to-1 or better, but I mean, some of them set up even nicer than that. I mean, I'm going to be green on the day, especially, with algos running at 86 to 96% accuracy rating right now. So, yeah. It's just all criteria. It's just criteria trading. It's everything you've taught me. It's everything that I've learned in the room being with you for, I don't know how long it's been, 7-8 years.
Yeah, it's been a while.
And you use criteria all the time. You talk about them in your videos. You say, I got 10 bullish indicators, 3 neutral indicators, and 3 bearish.
Correct.
Or you're looking at like NIMO, NAMO. You're looking at the VIX. You're looking at high-low indicators. You're looking at certain criterias that determine whether you're going to enter or exit positions. And that's all I'm doing on a lower time frame, is looking at certain criteria that allow me to execute a trade more efficiently. So, like, let's say you have 10 out of 10 criterias, right? You have 10 criterias I'm using on a daily basis, whatever. I probably use more.
Mm-hmm.
But if 3 out of 10 are firing, then you have a 30% success rate.
That's correct.
If you have 8 out of 10 firing, then you have an 80% success rate
Mm-hmm.
that the trade may work. So the more criteria, the better. But they have to be consistent, and they have to work for you, and that's what I've done, develop this style that works for me on lower time frames for scalping, for, day trading and stuff. So that's all it is.
Right. It's very important to understand that concept, is because, if they're consistent criteria, they're either going to reflect what you're looking for positive, or reflect what you're looking for negative, or they're going to be neutral. And this week we came in with 15 bullish indicators, and that told me there was a pretty good probability that we would see dip buyers. On top of that, we had gamma positive. So that told us that we knew that the dealers would be buying the dip too. So that's just part of the criteria.
Right, that's like a top-down market approach, is what you're saying right now. Is like,
Yeah.
I look at daily stuff. Like, if the daily RSI is above 50, look for closes in the upper half of the daily range.
Mm-hmm.
Right, and it's just a criteria. You're looking for certain things and aspects, and you're looking at data all day. You might as well use it.
Mm-hmm.
I mean, but that's basically what I'm doing.
Right. So you wouldn't buy the high of the day. You would buy a dip.
Right.
100% ATR.
Short at ATR.
Yeah.
I would short at ATR, and it depends on what time it is.
Yeah.
Too. That's another thing I use a lot too, is time. If it's pushing at the highs of into lunch, a pivot.
Mm-hmm.
Is when they normally form, because you say that a lot of times. You say, okay, we're in the A pivot and we're looking for B and C pivots at the launch,
Mm-hmm.
right? That's a schedule. That's a time schedule that the market uses.
Yeah, you're a lot more. You're a lot more precise.
Over the years.
You're a lot more precise.
I've noticed that over the years. It's a business.
Mm-hmm.
I think Stephanie from Stock Whisperer or something told me one time. I was in her room, I don't know, 10 years ago.
Mm-hmm.
She told me it's a business, treat it like one.
Mm-hmm.
And it got me thinking, it's a business.
Mm-hmm.
So people come in, they sit around the coffee pot or whatever and tell stories about the weekend and stuff. And then 10:30, they start working.
Mm-hmm.
And then you get a nice little push into lunch sometimes. And then everybody goes to lunch and liquidity drops off and dries up. And then after lunch, they come back to lunch and go, okay, let's get back to work. And there's a little push into like the 2 p.m.
That's correct.
Then after 2:30, there's another push. They're like, oh gosh, I got to get my work done. I got an hour left, or an hour and a half left. I better get something done, right? And there's another push.
Mm-hmm.
And that's what I look for. I look for price to be at certain pivots of areas of interest for price, and say, what's it doing? What's it doing with the volume? Right? What is it at the highs? Well, if it's at 110% ATR at 9 o'clock in the morning, I'm not going to buy it.
Yeah,
that's going to short it.
That's a good point. If we gap up to 100% of ATR right at the open, the likelihood is that's the time to take profits the first 15 minutes of the trading day, and let prices drift back into the expected range for the day, right?
Or try to
short it.
Try to go back to VWAP, right? Because it's going to want to go back to VWAP, because that's another average, right?
Mm-hmm.
VWAP is volume weighted average price. I use a lot of averages. I don't like to use just inconsistent values.
Mm-hmm.
Because averages are more consistent, like the 50% retracement. That's a consistent value. Like RVOL is inconsistent for me to use on a daily basis, because how often does a stock have RVOL? Like once every 2 weeks, once every couple months. I don't know. It's very inconsistent. So I use the average daily volume versus just some, RVOL.
Mm-hmm.
Or something like that. So I look for volume in the morning. I look for, 20% volume in the first 20 minutes. So like Tesla trades 100 million shares a day. I'm looking for 20 million in 20 minutes. Stuff like that. That's a criteria.
That makes sense.
And you can set those criterias in programming and algorithms and stuff. So I have eyes on where I don't have eyes on. You know what I mean? I'm the computers are looking for stuff that I can't see. So you can program stuff like that. And I use criterias to determine whether the trade is going to, the probabilities are higher. If I have 8 out of 10 criteria firing off versus 3 out of 10, and and I look at what time it is. That's what I mean by time, price, and volume. I look at what time is doing, what this price doing at that time. If it's at 200% ATR, I'm not going to buy it.
Right.
At 10:30.
Yeah.
Or if it's down 6 points, like Nvidia is down 6 points, it's got an ATR of 4.5, and it's 10:30. I'm probably going to look to buy it.
Yeah.
It's gonna stop. It's gonna go another direction. You can't just keep going straight up, like you said. You say it all the time. Stock can't just go straight up.
Mm-hmm.
So I'm picking off those ebb and flows. And I know a lot of people in the room asked me about this, and it came. I think few people put it on their charts. Those time pivots I talk about. I know people put them on their charts and use them, and they're like, it's magical. I'm like, yeah, it doesn't work all the time. I know that. It's just another strategy, but it's based off an average.
Mm-hmm. You want to explain that a little bit more?
Averages?
No, the times that you use.
Oh, well, sort of. I look at like you say, opening range.
Right.
You're waiting for opening range to make a decision because everybody's just jimmy jockeying around, probably
taking profits,
whatever.
Mm-hmm.
You're like, and that's another thing I'll do. I'll take profits off in the morning if I'm swinging, if I have it, into 10 o'clock. And 10:15, usually the markets try to make a decision. 10:30, stocks will try and make a decision on what direction they want to go based on the volume. If the volume's there and the water pressure's there, it's going to push higher, or it could be selling. It could go down too. Don't always have to go up, but and then it'll go a certain direction for a little while, and it'll go for like that hour and a half.
Mm-hmm.
It'll kind of choose that direction for a little while, and then it'll choose another direction. It'll find a pivot. It'll find a call wall or something like that, or R1, S1, something, and it'll back off.
Or a Fibonacci,
yeah.
You said
time and price are used in algorithms because they're constant values.
Mm-hmm.
There's nothing changes. 420 on Tesla is 420. Algorithms work best on pure price. So like futures, I have a lot of stuff developed for futures. But like volume is a criteria. Is the price trading above VWAP? That's a criteria. Is price trading above or below previous day's close? That's a criteria.
Mm-hmm.
All those things can be programmed. Like all those things can be put into a program for eyes on where you can't see, and I just input the stock that I want to trade, and it tells me yes or no. And then in time, I mean, if you look at a lot of stuff that Lee Star posts, I saw him post something once. And he said, "Look, they bought all these calls,
mm-hmm.
and it was at like 12:39."
Mm-hmm.
And you go, "Yeah, it's all on time. It's not. They just bought a chunk at a certain time."
Mm-hmm.
They didn't say, "Oh, well, I'm going to buy it at this price." They used time instead. But you can also use price because it's pure. Time never changes for us. The market's open from 9:30 to 4 o'clock. That's a constant value that can be used to purchase or sell stocks.
Something interesting you said also recently is I don't trade during lunch. You don't trade during lunchtime, or a lot of
Correct.
times you won't trade during lunchtime.
I will peel off more profits going into lunch.
Yeah. Okay.
From 11:30 to noon. I was already in a position at 10:30 or 10 o'clock, and I'm now getting out of it. I do not want to enter positions at noon.
Right, because that's
Like today, Tesla was sitting there in a flag. It was doing something stupid. It was just sitting there in a flag, and then it popped at lunchtime, and I said, "No, it's a false positive because it's not supposed to be going up at lunch. It's supposed to. It's liquidity's drying up. What's it doing? It's doing something wrong. So it doesn't. Yeah, I don't buy into lunch. I learned that a long time ago.
Did you just say Netflix? You're talking about?
Oh, Tesla.
Tesla. Yeah, Tesla faded all day. Yeah.
Well, it had this huge pop going into lunch.
Right.
Or like 9
Right.
or 3 or something. I said, no, that's not right. It's not supposed to do that right now.
And we saw a big sell order block right there too.
Yeah, it just went here. It just went down.
Right. Sell order block after sell order block into the close. Yeah. That was pretty
I'm done.
pretty definite. Yeah.
But yeah, I try not to, and then I'll wait until after lunch and see if they get back on the horse and start buying, you know. I'll wait. I don't just like, you know, get in and out of trades anymore. I kind of just, you know, I'll wait for the open, and I'll do my list. You know, you mentioned my list. I track the top 10 S&P 500 stocks because they let me know what the market may do or where price action may be or may close, may open. Yeah, I track the closing print all the time.
Mm-hmm.
I mean, this the whole room is based on the closing print.
Right. That's why we call it the closing print.
I do it by hand because I want to get my mind working.
Mm-hmm.
I don't want to use a computer. I got computers to do other stuff for me. I need to get my mind going in the morning.
Mm-hmm.
I wake up at 6:30 in the morning. I'm ready to do math and trade. Not really. So I do it by hand so I can get my brain functioning so I can add and subtract.
Let me ask you this. This is something that interests me. So when you get ready to put your list together, what sort of workflow do you imagine you're putting together? Do you do it in the evening after the close?
Yeah, I do it at the closing print.
Okay.
Yes, I do
Okay. So let me ask you this. All right. So you do it at the close. You know what the closing values are, and you have a certain workflow that you go through. Can you just discuss the workflow? Is that possible? If you think about it, let's say you're starting off with Apple because it's it's letter A, and you just go through the IV, the ATR, plus or minus.
Yeah.
Okay.
I'll pull up Apple real quick. So Apple, I just go through it on my options chain.
Mm-hmm.
I have an option station pro on TradeStation.
Mm-hmm.
And I'll just type up Apple.
Okay.
And the close was 223.55. Okay, so I'll round it to 223.50 because I'm old school and I don't care. Also, back in the day when we were tracking stocks, they used to track them in eighths. Remember that?
Oh yeah, 16ths, eighths, yeah.
Well, now you look at Money Magic levels. Okay, I use that a lot.
Mm-hmm.
You look at Money Magic levels. Let's look at Apple real quick here.
250.
Yeah, see, he's not at 250.83.
Right.
They're
That's a good point.
They're at levels. You know what I mean? They're rounded.
Uh-huh.
They're rounded off. So I'll round off to quarters and 50 cents.
230, 225, 220. Yeah. Mm-hmm.
So right now I'm at 223.50 for the close on Apple. I'll go down to the option chain and look at 223.50, and there's 222.50 and 225. Okay, and then the IV is saying 29.33 and 29.49. I'll just say 29.50, right? And that's the IV. And then I'll look it up on stock charts. what the ATR is for Apple, which is 338 or 538. So I'll just put in 550. I'll just round it.
Okay, Apple.
You know,
Just following you here. Okay, so you go to Apple. Yeah, we got 538. Yep.
and then I do up, up, down, down on my list. So my list will say Apple, because I just did it. Let me see. Apple, it says 227 is the IV leg, which is A. 228.50 is ATR. The lower IV leg is 220.50, and the lower ATR is 219. I do it up, up, down, down.
Mm-hmm. Okay.
So it's, so I can just look at it. I just want to glance and look at it and say, well, am I, I don't want exact, because I can't read exact. I can't read like 219.37. I'm not, I just, my old eyes can't take it,
Mm-hmm.
I look at computers all day and numbers all day. So it's like, I just want something quick, simple that I can look at and see if I'm in an area that I need to be concerned with. That's it. Just like money's levels. They're just an area of concern, 250, they're all rounded. They're all nice and easy numbers to read. But yeah, I do that in the morning to get my mind going.
Mm-hmm.
That's all I do it for. The computers do the rest for me.
Mm-hmm.
So, yeah.
So you don't go into the market, you just wing it anymore. Yeah.
Back in the day.
Yeah, it's kind of interesting. It's interesting you say it the way you do, because I kind of like minimalize everything that I do, but it becomes such it's a natural workflow. What's the market's doing? What are the sectors doing? Which sectors are hot? Looking at my grid of stocks, I'll look at Money
your
Magic.
workflows.
Yeah.
And you're looking for criteria.
Yeah.
Looking for, reasons to enter or exit or something. It's just criteria.
Mm-hmm.
And everybody I know has been successful in this business trades with criteria.
Right.
You do it. Chris Travacco does it. Dr. Kenneth, MEGT. I mean, everybody that I've ever studied under or worked with uses criteria.
Mm-hmm. I learned it from Yukarowitz. I don't know if you know who he is, but I learned that back in 2005, I believe, from him, that he has like a grid of things he looks at. So I developed it with the opening monologue. There's a grid of information that I always look at. So I attribute that to Yukarowitz. I mean, it's something that just makes so much sense. You have to have a workflow. Otherwise, you're winging it.
Right. I've listened to you for so many years talk about it and repeat everything, like, is price train above VWAP? Is it pulling away from VWAP? Is there volume? Is RSI above 50 on the daily? You mention this stuff a lot.
Mm-hmm.
And I started to break it down and just go, yeah, these are criterias. And so I have different criterias on shorter time frames because I'm scalping rather than investing or whatever, and swinging. But that's okay. It's just a different style that still uses the fundamentals and basis of criteria.
Yeah, you have to find a method that works for you, and you have to repeat it consistently.
Yes. And if you repeat the same thing over and over and over, like I was taught in school by many of my teachers, they said if you read or hear something 7 or 8 times, you will retain it.
Mm-hmm.
And I've heard you say these things over and over and over, and it clicked. Like you do, you say this stuff a lot. I don't know if you realize it, but
yeah, sometimes I realize I say it too much. Yeah,
a lot of stuff I use is based on what you taught me. Trade of the day setup. That's the ABCD pattern.
Mm-hmm. Yeah, I think you actually found a graphic of the ABCD with the little. Yours is more curvilinear. I recreated it in Adobe Illustrator, but somebody brought that up at some point, I'm not sure who it was. It might have been you, might have been somebody else, but that graphic came from somebody that was actually doing that. And I think the guy was saying something like, I use this pattern to be very consistent, ABCD pattern. I made a lot of money, blah, blah, blah. It must be 10 years ago that I saw that, 8 years ago,
I
whatever.
I developed my algorithms using that pattern.
Yeah.
A was breakout, B and C were accumulation, and D was gap.
Mm-hmm.
And I created those algorithms based on time, price, and volume back 10 years ago. All I did was tighten them up for a daily time frame. Because I'm still doing top-down market approach. I have daily, then I just break them down into intraday. But I developed this new system that I'm using now when I was sick in bed in COVID in the hospital in 2020.
Yeah.
I was writing it down on napkins.
Mm-hmm.
I had nothing to do. I was just sitting in the hospital. I was like, I wonder how I can fix my workflows for next year. And I came up with this new algorithm that's been working pretty good intraday.
Mm-hmm.
And it's just the same philosophy, same fundamentals and foundations as the daily algorithm. It's just working intraday in a tighter time frame. Yeah, but I've been studying the ABC pattern, utilizing that for, I would say, 12 years now.
Think about it for a second. The purpose of this chat is maybe somebody is listening, a new member, and they're not consistent yet, or they're perhaps looking to improve their daily workflow. I would say, find whatever works. If it's ABCD, if it's knowing the ATR before you go into a trade on the day, or if you just flip through the 10 New York FANG stocks, there's got to be something consistent that you do every day. And when your criteria triggers, that's when you enter the trade, you put in your stop, and then you take the trade.
And yeah, and that's a great example. Is track what works, get rid of what doesn't.
Mm-hmm.
Too, I've done that over the years. A lot of that.
So many people have too many things.
I'm still working on that aspect of my training every day.
I do too.
You have to get rid of what doesn't work. If it's not working, then get rid of it. But you need to stick with what works and build on what works.
Mm-hmm.
Like an ABC pattern, or not buying the high of the day at ATR, or, those things that work consistently on an average. That's what I look for. Yeah,
those two things right there are probably the most important things to keep an eye. That's why I always buy the dip. If I see myself buying the high of the day, like it did with NVIDIA, I made the mistake with NVIDIA today. It did come back, but NVIDIA, I bought it right probably about 15, 20 minutes into the open. And I thought, well, maybe this is going to continue. So I bought some lotto calls. But about 5 minutes later, I realized that this trade was not going to work. So I got out of the trade as soon as I realized it wasn't going to work.
I did that with Apple yesterday too.
Yeah. So
I bought it, I think 223 or something. And I said, I'm putting the time. You got to have my stop in place.
Mm-hmm.
Where's VWAP? Where's VWAP? That's the first. I want to find where's resistance, where's support, where's, and then I do the math and go, okay, well, I'm a point and a half away from VWAP.
Mm-hmm.
Where's my stop going to be? It's got to be less than 50 cents, because I'm looking for 3-to-1 trades.
Mm-hmm.
So it's boom, in, out, done. It didn't work. So what?
Yeah.
And I try to use the same amount of value too when I'm trading.
Do you sit and hope? Do you sit and hope that a trade will work for you?
Well, I'm using the same value.
I'm being sarcastic.
Yeah, no, I know. Hope and pray. That's what I use.
No, you get out when it tells you, okay, it's time to get out.
And if it bounces on you, so what? that's happened to me before too. I get out and I have my stops too tight and it bounces,
Mm-hmm.
and you're like, I could have stayed in it. It's like, no, don't move on.
Yeah,
It's a
I did that with
business.
NVIDIA. That did both of these things with NVIDIA. I bought when I shouldn't have, thinking that it was going to be a lotto trade and we keep going. And a few minutes later, I said, okay, I'm out of this. And about an hour or so later, the stock actually came back and started looking pretty strong.
Right. Yeah, it happens a lot.
Yeah. So right around, I guess, 10:40, we moved right back up, nearly made a new high, but we didn't make the absolute high of the day until about looks like 3 o'clock. So
Yeah, that's another thing I won't do either is buy into the close, like 12. It'd be like 3:30.
mm-hmm.
I'm done entering new trades. I should have already been in at 2:30.
At the latest.
I should be getting out.
Mm-hmm.
I don't need to be chasing that stuff because it'll jimmy jock around and throw you off sometimes, and it'll really screw you up. That's not consistent. Those aren't consistencies for me.
Mm-hmm.
I look for consistencies all the time in my trading. I look for stuff that works, and I look for stuff that doesn't work, and I get rid of the stuff that doesn't work.
Yeah, in some ways, the phrase consist. I look for consistency seems kind of vague, but you're looking for the same thing that tends to happen same time of the day.
Yeah,
to repeat,
and it's based off of averages.
Mm-hmm.
ATR is an average. VWAP is an average. Daily volume is an average. I'm using averages because averages work. They're more consistent. They have a consistency to them. And sometimes, you get an expansion day or you get a doji day. So what?
Mm-hmm.
But I'm not, if Meta's up 27 points and it's got an ATR 20, I'm not chasing it. And if I'm trading it into 20 points and it goes higher, then so be it. But at least I'm getting out at ATR. I'm using those consistencies of the averages, and that's what I talk about a lot when I say, I'm using on an average. I look for this because it's what the values are set at.
Mm-hmm. Okay, let me ask you a question. I have a comment from Rob in the room. He's been around. Rob, you've been around since the very beginning too, I believe. Maybe we can. Rob's question is: maybe we can see an example of a trade today applying the data of the sheet on auto trading channel. So you talked about that.
Okay. Yeah, sure.
Okay, so
Amazon's a good example. I pulled out an A in the morning. What was A pivot on Amazon? Here, let's go look at Amazon because I was trading Amazon SPY this morning.
A pivot was around 10:25.
And it was at 10:30, right? It was going into 10:30. That's right. So here, let me post this in the name. Amazon. So Amazon reached what, 235.40?
Yep.
235.44. My IV level, my A pivot was 235.50. That's when I was getting out because I said we're at A pivot. I even said that too. I said Amazon's at A pivot. I'm done.
Yep.
And SPY's A pivot. Let's look at A pivot on SPY. That's why I use this thing. I just glance at it. I'm not trying to get exact.
Yeah, SPY hit the high right around 12 o'clock.
Well, yeah, it's A pivot is what? Yeah, 9
o'clock. 607 and change. Yeah.
Yeah, I was looking at an A pivot of 608.
Mm-hmm.
So I'm getting out based on time or price, and it was lunchtime, right? So I'm exiting my trades just like I would if I'm waking up in the morning and I'm swinging something.
Mm-hmm.
I'm like, okay, it went up, it gapped up, I'm going to take profits off. I'm not entering. I'm taking profits off.
Mm-hmm.
And that's what I did with SPY. I'm not entering a new trade at lunchtime. I'm taking profits off because it's going into a pivot right now. And it's not consistent. It's more consistent than it isn't. But it didn't form a B and C pivot and make this perfect looking pattern today. But it gave me something to work with and said, hey, look, it's 12 o'clock. Price is entering that A pivot of 608. You need to get out. Same with Amazon. Amazon's going into A pivot at 10:30. I need to be aware of that and get out. It's an area of interest. It's an area. Those are areas of interest, and it's at a certain time. It's been pushing for 2 hours. You need to think about it. It's going to probably change directions. It's not just going to go straight up. It's not going to go straight down.
Yeah. So
that's how I use that.
Microsoft, for example, we closed. Microsoft looks like yesterday we closed at 420, whatever the hell it was, 428, and we ran up to 445. So we did, I guess, an expansion day today on Microsoft.
I wasn't chasing it. It was already at ATR when it was trying to break out.
Yeah, that's a good point.
I was like, I'm done. I'm not chasing it.
Look for a BNC pivot, which I think it gave us a BNC pivot, actually. Not really.
And that's another reason why I track 10 different stocks, too, because I can't trade them all the time. I used to just trade SPY or Qs or whatever.
All you need is one good trade.
I couldn't get trades in them all the time because they weren't set up.
Yeah, you only need one good trade.
Right? So then I learned this from Crimson. Look at a bunch of stocks. That way you have more opportunities that come during the day. So, and then look at Microsoft. Microsoft's IV is at 21.5% too. So that totally disqualified it for me.
Mm-hmm.
Even though it went up, and it's going up, it's doing all the right things. But I mean, ATR and Microsoft is 8.25. It's like 8 points. It's already up. What time was that? 10:30. Let's look at 10:30. It was already up 12 points.
Yeah. And then it finished at the high of the day.
I'm not chasing it.
Mm-hmm.
It doesn't qualify. It's under my 24% IV criteria I have.
Mm-hmm.
So, all that kind of stuff, you just start looking at stuff and just go, it's all about the workflows. Like you said, you just start going through stuff and you just look at it every day, the same thing over and over. And you're just like, yeah.
Do you ever look at a grid of these New York FANG components, these 10 stocks?
No.
I do that a lot. I mean, if we open the day, oh, you're being sarcastic.
No, I'm not.
You're not? Okay. Because I look at a grid of these stocks, and in the morning, if they're all red on the day, I'm definitely not looking for longs unless we get everything to start turning together.
Oh, okay.
You know what I mean?
Yeah, I know exactly what you mean.
Yeah. So
that's another reason I track what I track,
mm-hmm.
too, is because I can have a better understanding of what the market may be doing as a whole.
Yeah.
And you can see more or less like things changing before your eyes because you're tracking everything.
Mm-hmm.
The other day, I noticed Tesla had a 67% IV and it dropped the next day to like 53%. And I said, it's going to bounce because that's just like.
So state that again. State that again because I didn't catch the entire thing, but it made sense.
If IV is contracting, then that's bullish.
Mm-hmm.
In a sense, it's just like the VIX. If the VIX is at 20 one day and you wake up and 16 the next, but see, I'm tracking it every day so I can see it. So if it's contracting, do you know it's bullish? Kinda. I mean, it's not. If it's going from 20 to 24, that's bearish, right? If VIX is going up, it's kind of bearish, right? So if the IV is contracting on a stock like Tesla went from 67 to 53 overnight, then I'm looking for a bullish trade the next day, and Tesla had like a 20-point day or something.
Mm-hmm.
Because it's ATR. I look for ATR to contract too, because I know that ATR if ATR is contracting, then we're creating dojis. And the rule is every third day a stock will reach its daily ATR. It's in a rule. It's part of the VIX, right? So if you have double daily dojis, then you're looking for a move the next day on the third day. At least I am.
Yeah.
And it can go up or down. It doesn't matter to me. It's just going to be closer to an ATR day than it has been the last 2 days. I look for stuff like that. That's why I track what I track, because I can see what it's doing before it happens. Like I saw Netflix at 150% IV, and I said, "Oh, let's have it. It has earnings."
Mhm.
You know, I don't have to look at an earnings calendar because I can track the IV.
Yeah, exactly.
No.
Yeah.
And if IV is greater than ATR, then I don't want to trade it. If I'm trading options, because it's, you know, you're booking a plane flight, you know, it's twice as much
Mhm.
than what the travel distance is.
Well,
You know, so it's like, yeah, it's like booking a plane flight from, you know, LA to Asia, and they drop you off in Hawaii.
yeah.
You know, it's a total ripoff. So yeah, and they're killing Theta and doing all this. Price starts contracting and doing all this weird stuff. So I stay away from those. That's why I track the stocks I track, because I can see their characteristics and their behavior.
Well,
And
that's
like you
another
said,
thing. That's another thing.
red.
You're looking at the same things over and over and over, so you know when the character changes.
Yes. Yes, correct.
I see a lot of people, you know, and it's fine. I do it too, but I'll trade some things that aren't normally something I look at. Like was VSAT yesterday, and today it was Rigetti or something like that. I'll do occasional day trades in stocks that don't usually watch as much as I do, or in trade as much as I do the New York FANG components. You know.
Correct.
So I don't have as good a sense of what the character of a stock is if I'm not trading on a daily basis.
Correct. And like if the SPY is just, you know, fiddling around at 1-to-1 volume, that's not a trend day. I'm not going to go heavy into my stocks either.
Here's another point. Here's another point. I lost my train of thought. Shit, you said something, and I was going to write it down. Shit, it was a good point too.
So much. There's so much.
Yeah.
You know, I really love talking with you, Vinny.
This is cool.
This is good. This is good. Yeah.
Yeah, we need. I kind of put the Trader Spotlight on hold there for a while. I think the last one I did was with Robert Kaplan, the late Robert Kaplan, the guy who used to trade with us. I was a good friend of him. He used to send me little packages in the mail, if you know what I mean.
Yeah.
From he would grow in his backyard in Virginia, but he passed away. But he was a good guy.
He's one of the reasons why I trade Tesla today.
Yeah.
Because he was in your YouTube channel and I was watching him.
Mm-hmm.
And he would buy 1,200 shares, 1,500 shares when the price was at like 12.
He would hit it big. Yeah, he would hit it big. He's like Russell.
What is he doing? Mm-hmm. And I started watching and listening to what he was doing. I'm like, he's averaging, and then Tesla would just rip to one way or another. And I'm like, this thing likes to move. So I started tracking Tesla. I started trading Tesla, and I'm like, I love it. It meets all the requirements that I look for in a day trading stock because of the IV. Mm-hmm. The IV is usually greater than 50, and it's less than its APR. It's just got this sweet spot. It's got a really nice sweet spot for day trading, and I've noticed over the years in my trading. So.
Okay.
And I picked that up from Robert.
Yeah, I remember what it was I was going to say. You know, it's interesting that I'll see a lot of trades posted in the trading room, and many times it's stocks that I don't usually trade. But what I always think to myself is, what is my goal? Goes back to what you said earlier about operating like a business. What's my goal every day? My goal is to make a few bucks with options on one or two stocks to make $500,000, 15, $2,000 a day, whatever. And when I stray from that and I'm trading stocks that I'm not familiar with, my percentages of wins tends to go down.
Your success rate goes down. Yes.
Yeah, because I'm not being consistent. I'm trading something that I don't normally trade. And it goes back to the whole thing. What is my goal for the day? My goal is to make 2 or 3 successful trades a day using a 50 delta. That's just scalps. And then everything else kind of fits in there. But a 50 delta. And I'm just looking for 3 to 1, 4 to 1, risk to reward. That's my goal.
You brought up a good point. You brought up another good point. You're looking at inconsistencies in the stocks that you don't trade, the success rate versus your win rate on those types of stocks that you're not tracking every day. If I'm tracking a stock like Tesla, Microsoft, Netflix, whatever, and Cayman sees it, you see it, Brother Bill sees it, and you guys all have the same levels, I'm going in heavier because you're all seeing the same data I'm seeing. You're confirming my bias.
Well, not only that, but it's also
because it's being tracked. It's being tracked by me. It's being tracked by everybody else.
Well, the other
it's
thing,
not just some random, VSAT or whatever you were saying earlier.
So, well, the other thing is you just hit a point that reminds me of that's why RVOL and VWAP work because, or whatever, you use percent volume. I use RVOL and percent volume. But VWAP, when price is moving above VWAP, RVOL or percent volume is high, I know that a lot of people are probably looking at it. And if it's moving above a level like the previous daily high, I know that there's a lot. It's probably in play. Is what I'm trying to get at.
Yes.
I'm looking for stocks that are in play. You just said it with if I'm looking at it, Cayman, Brother Bill, Mondo, whoever, Frano, Susie, whoever's looking at it. If we're all looking at the same thing, pretty good odds that this is going to take off.
Yeah. Look at magic levels, and if my magic levels line up with your levels, then you're like, wow.
Yeah.
I can go a little heavier. But if everybody's not on the same page, and there's mixed bias going on, then I'm not going to go as heavy.
Yeah,
that's another thing I've learned to do over my trading experience.
Well, there's one thing that some of the new members have asked me about Money Magic levels, and it's very simple. If you understand what dealers are doing, you got a put wall down below, that's support. The dealer has the incentive to keep price above that put wall because they're short the puts at that level. The call wall is the exact opposite. The dealer has the incentive to keep prices below that upper call wall because they're short those calls. So if you get a stock like Tesla that moves above Money Magic's level, and you've got everybody in the trading room looking at the same thing, looking for a breakout, if it does break out, you have a very good possibility of a successful trade. So I'll hit it with 20 calls, 50 calls, whatever, instead of just 5 or 10.
Right. That yes, exactly. And you brought up another good point I wanted to talk about is when I say I'm getting starters, right?
Scale in.
Let's say I want $10,000 in Tesla, but I'm not going to go in and buy $10,000. I'm going to buy like 10%, 15%.
Yeah.
Value.
It's always good to do that
because dip my toes in the water, see what's going to happen. And if it starts working out, great, add to it. If it doesn't work out, fine. I didn't lose a bunch of money.
Yeah, you lose a lot less than you would if you bought 1,000 or 10,000 shares. Yeah.
Yeah, I'm not buying it all at once. I'm averaging in, averaging out. I'm averaging in on the dip, averaging out on pops, whatever. And I treat all my trades the same value. It wouldn't work if I didn't. If I'm looking for 3-to-1 trades, and I say, okay, this one's 10,000, this one's 10,000, this one's 10,000. I want to lose a point at a 50-cent delta. I mean, you got to have it. It's got to be equal value, or it's not going to work.
Right.
You can't just go, I didn't do good on that last one. I'm gonna, trade $1,500.
Let me ask you a question. Okay, so this is something that I would probably ask myself in an interview. Shit, I lost my train of thought again. I'm getting old, man. I'm getting old. Shit. That's all right. I'll think of it in a second.
I love you, Vinny.
Man, you know what it is? I've been up since 5:30 this morning, and I get
No
prepared for the
kidding.
trading day, and it's just I'm burnt out. It snowed last night. My son was messing around in the snow in the backyard, and that's the other thing. You got responsibilities, but you got to run this thing like a business. So hopefully I'll remember what the hell it is I was going to say. We're coming up to
I want to say that
your phone's breaking up. You still
you've
there?
been here for years now.
Yeah.
And it's like, just thank you, Vinny. You've been here for years, and you haven't even taken a day off. You moved from Jersey down to Myrtle Beach or whatever, and you didn't even take any time off there.
Yeah.
Really, you're right here for us all the time, and you're calming, you're soothing, it's wonderful to have you.
It's interesting you say calming, because I've learned over time there's nothing to get excited about, because the odds of the markets doing something that's going to completely blow your account is very minimal. Every once in a while, we'll get a black swan day. We haven't had one of those in ages. 2020 was probably the last big one. But I've learned that why get emotional? The other thing that keeps you from being emotional is having stops and knowing where you're wrong on a trade and just getting the hell out of the way,
Right.
So that's why I'm calm, because I know that the markets. The other thing about knowing the markets is that when I look at advanced decline percent and it's oversold at, say, down at minus 30%, I know that there's a very high probability the markets are going to start to trend higher. The last couple of days have been a little bit off, but I know that over time this is going to work in our favor. Same thing with everything you discussed today, that consistency is what's going to keep us on the right path, right?
Yeah, it's just like NIMO. NIMO's at 130, negative 130. I'm not shorting the market.
Right.
Like, you just see things over and over and over that have worked on average consistently. Consistency, yes. It's average values. Like you said, we might have a black swan event once in a great while. It's not going to happen like every day. It's not an average thing that happens.
Yeah, I see Tamara's saying, I guess you have those episodes once in a while, you forget shit, you get older.
Yes. That's why I do my math by hand.
Yeah, you got to write this stuff down, Yes. Oh, Christ. All right, so we've been an hour into the trading. I think we're going to cut it short so that
I love you, man. Thank you for this opportunity.
It reminds me of that Bud Light commercial. I love you, man. You can't have my beer, whatever that was.
And I want to give thanks to everybody that's been there for me, throughout my trading career. Stephanie and Southpaw and Jax, and I know Miss Kara.
Yeah.
And Crimson, and just everybody that's in the room too now. Still, Fran, Cat, Bill. Everybody, Lee Star. I don't know. It came in. Everybody. I don't know if I forgot some names, but everybody that's helped me. Because that's what this room was developed for. You made this room in the mindset of traders helping traders. Being
a big family. Yeah, I like the fact that everybody's in the same mindset, that we're not a bunch of assholes, And
that's what I'm trying to do now. I've been trading for so long. I'm just trying to pay it forward. I'm just trying to pay it forward and help people where I can, Yeah. Hopefully this was helpful.
I think it was. Listen, I appreciate it. Had a nice traders chat, trader spotlight with LA. I hope everyone has a great evening. We're going to call it a day. This video will be uploaded to YouTube, so I'll post. Well, you have the link in the trading room, so you can review this if you want, because there'll be things that I want to review as well. So, listen, LA, thanks for your time. Appreciate it. And
anytime, man. Anytime. Talk to me more.
Okay, we'll see you tomorrow. Have a good one.
Thank you.
Take care.
You too. Good night.
Good night, everyone. Ciao.